Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Friday, February the 5th, 2010. Well, a very small body candle today and quite a dramatic change following on from the previous day's very large red-bodied candle. And we expected that a situation like this might arise where the market was just too volatile and it basically did need to have some sort of a rest. So, having said that though, it's still not a bullish day, but certainly not as bearish as the previous day. The range of the current candle has extended down beyond the range of the previous candle, which is bearish, and we have a lower high and a lower low, so we have a continuation of the downtrend. But we have this very long shadow on the bottom of this small body, and that's upside price rejection. Very strong buying coming in as the market sold off. So the sellers weren't able to maintain the commitment that they had earlier in the day, and they certainly lost a lot of the commitment that they had from the previous day. So not a good sign for the sellers. Having said that though, not a good sign for the buyers either, because they really didn't have any strength to take this market substantially into the body of this candle. The market opened and closed almost in the same area, with the bulls making only very slight progress on the day between the open and the close. The market interacted with this area down around 1040 roughly. Low of the current candle is 1044, and that's where support came in and buyers came in and bought the market at quite significantly. This is a potential candlestick reversal pattern, two kinds. The first kind is the hammer pattern, and that occurs at the end of the downtrend. We have a fairly small body with a shadow at least twice the length of the size of the body on the bottom of the body, and this is where the market is said to be hammering out a bottom. And this is a potential reversal signal because of the sell-off, but then the inability of the bears to maintain their commitment to taking the market lower. So that's why it's a potential reversal. Also, the small body means that it's a potential reversal. It means that all of the power that the bears had the previous day has dried up, and neither side has really made any significant net progress between the open and the close. It's also a harami pattern, and that's where the body of the current candle is completely engulfed by the body of the previous candle. So that's another significant factor to consider with this market at the moment. Now, having said that though, both of these candlestick reversal patterns do need confirmation, and confirmation would be a higher high and a higher low. Therefore, the high of the current candle becomes very important for a potential change of trend to the upside. Now, if there is a change of trend to the upside, there's some quite solid resistance overhead. Initially, resistance at the Tenkan-sen at 1074, and as we've said quite often previously, when the market is trending down very strongly with very strong momentum, we can see that from the slope of the Tenkan-sen, that the market will tend to find initial resistance up around that level at the Tenkan-sen. So there is potential for the market to retrace back up to there and then sell off again. So we need to read the short-term dynamics of how the market reacts to that level. If we do see negativeness coming into the market, then there may be potential for the market to test the 1041 level again. If the market doesn't hold there, then there is potential resistance at the 1080 level, and that was a previous area of support and resistance, so there's a strong level there, and it also coincides with the bottom of the cloud or the Kumo, so that adds weight to the fact that that could be potential resistance. Also, anywhere through the cloud is potential resistance, so all the way up to roughly about 1100, and also at the Kijun-sen, that could also hold as resistance at 1097. So the market is trading down below the cloud or the Kumo, so we do have a negative market in overall terms. This is on the daily chart, and the market is trading down below the Tenkan-sen and Kijun-sen, which means that the market is bearish, and the Tenkan Sen is below the Kijun Sen, which means that the market also means that the market is bearish. So quite some bearish factors here for this market. Unlikely that the market will go on with this sell-off considering the type of day that we had, but we do need to watch the high of the current candle, certainly the low around this 1040 region at this previous support area needs to be watched as well for this sell-off to potentially continue. If it does continue, there's a minor support level down at 1030 and then down to 1018.